Hello, today is Wednesday, the 25th of February, 2009, and this is Brian Shannon. We had another very volatile session in here today, and the volume picked up a little bit. Really, we have to look at this daily time frame is still in this range, but with this heavier volume and these failed rally attempts intraday, I think the level of frustration continues to grow amongst anyone who remains bullish on this market, and I think we're going to get a resolution of this trading range here shortly. And as we see most of the time in a trading range, they're typically resolved in the direction of the trend of the longer term time frame, which of course remains lower. So that's a fancy way, I guess, of saying it looks like we're heading for a breakdown. Let's go look at the 30-minute time frame. We saw that yesterday the market had gotten above the 5-day moving average, but I'd said, as long as that 5-day moving average is still declining, you still can't trust it. I'd like to see a decline down towards about $28.30, and then perhaps a rally back above it. It did do all those things, but late in the day, as we saw, it got up to that $29, just short of that $29.20 level that we were watching, that it failed and failed miserably on some heavier volume in here too. So the final half hour of volume we saw, half hour of trading rather, we saw heavier volume as the market ran up to this level. We were looking for resistance 29.20 to 29.30 and got rejected hard. It closed right on that 5-day moving average. We've got this little uptrend line intact here, but unless we can get above 29.30 and hold above there, then I think we're going to get a pretty quick resolution to the downside. And even I would say, let me take that back, because I think that even if we get above 29.30, I don't think it's likely to hold, because this 29.60 is such a bigger level in here, and it's also where we approximately find the location now of the 20 and the 50-day moving averages, which are both declining. So the market remains a mess. If you look at what occurred intraday, a real choppy session. We had a great rally in here, but then it just sold off miserably right to the end of the day, right at the end of the day, in the last 20 minutes, and right down to the daily VWAP. So still looking for the possibility of a bigger volume washout type move in here that really gets the fear going in here. There's really no compelling reason to be long. I don't think fundamentally, but definitely not technically either. If the financials were down a nickel today, the Qs, by the way, were down 19 cents, or about a little more than 0.5%. But the financials, obviously still remain below the January low right here, the January closing low. And trying to get back above that level, but here we are rallying up to and being rejected intraday at that declining 10-day moving average, which is below the 20-day moving average, which is below the 50, the 100, etc. We look at the 30-minute time frame, we're looking for a pullback towards that 5-day moving average that would hold, and I'd said maybe this level in here at 760, got a little bit below there, but we're looking for maybe a pullback towards 760 and then a continued rally attempt. You can see it got up to the highs from this gap lower here on the 17th, but was unable to close that gap, and the market still remains a mess. We've got a 5-day moving average that's starting to flatten out, but again, same thing we saw here, heavier volume towards the end of the day as the market sold off. I still think 750 is going to be an important level as far as support for this market. Short-term resistance, we've got that $8.40 level. Then we've got $8.70, and we've got 100 other levels up above it. So no reason to be trusting this market. I'd shown some trades in Twitter today on the long side with some of these triple funds, and they were good long trades. But same thing here. Great rally in the FAS in here. If you take a look at it, it went from 520 to 620, so almost a 20% rally over the course of an hour or so, but then didn't completely fail the way the NASDAQ did. But you've got to be taking profits, long or short, because these moves can be devastating, particularly, again, when you're trading the levered funds. So financials remain a mess. Russell 2000 obviously remains a mess. This one is looking more and more and it has been, but it's looking more and more like the real problem for this market. We've got, maybe you could call this a little bearish pennant in here. If it breaks below the lower end of that, then it ought to continue in the direction of the primary trend, which obviously is lower. We've seen the 42.5 give up. We see heavier volume in here today as well, and it's trading. I'm looking at my screen right now. It's down another 30 cents after hours, trading at 39.85. The after hours markets, really, you can't read too much into them. They're so volatile overnight. But in this market, we've got a lot of levels in here to look at. And the 41.60 was what we were looking at as far as a potential level of resistance. The market fell short of that. It rallied. It dropped off from the declining 5-day moving average right away. Came down, didn't make a new low in here, but did get a bounce back up to the 5-day moving average, which is still declining. Let's look at the 10-minute time frame. So we had seen it rejected from there yesterday. It sold off hard this morning. Got back up to that declining 5-day moving average and found sellers in there once again. So you can see heavier volume on the sell-off as well. It keeps coming down. This 39.5 level, breaking below that might be what really gets the next shoe to drop in here. And it would be nice to see these November lows undercut, because that would really clear the way as far as the potential for another real fearful sell-off that might even last a couple days before we get a powerful bounce. And even if we get a powerful bounce, again, look at how many rallies that we've seen. Go back to that table under popular posts. It shows all those rallies of greater than 10%. I think we had 10 of them last year in the NASDAQ, and probably even more in the Russell 2000. But obviously, we're in a bear market. You're going to see tons of volatility in here, but you only want to buy when the evidence is there, and you have to have a strategy for locking in those gains. You can see here late in the day that the Russell 2000 made a lower high right in here, and then it confirmed it with a lower low. And regardless where it is in relation to VWAP, if you're long, you want to get out of this thing as soon as it makes that lower low. What I don't do, and maybe when it's this far extended, what I ought to do is trade it short, but by this time of the day, I'm too tired to reverse completely mentally. But the TNA had great moves in here, 1680 up to 1820. But look at how that thing failed. If you don't have a strategy for locking in those gains, it's just going to be more frustration. And again, I think that's what we're seeing, is more and more frustration in these markets as people realize that there's nothing the president can say or his cabinet can do to let the natural course of action take its place here in these markets. And the indication from the markets is that things are still going to continue to be worse as the markets discounts the past and looks forward, as they say, 6 months. So it's telling us 6 months from now, don't expect this economy to be very much better than this, in spite of people saying, well, we'll have a second half recovery in 2009. Well, in the second half, they'll be saying we'll have a first half recovery of 2010, as they always push it out 6 months. The SPY was down 61 cents, or about 0.8%. Also saw a pickup in volume in here, and this market also is similar to the Russell 2000 in that it had recently broken, that is last week, below important support. That was on that gap lower from the holiday shortened week. That was a Tuesday gap, and then we saw the market. We did make a closing low here 3 days ago. That was last Friday, or was that Monday, I guess. We made a closing low, and that was a 12-year closing low, but we haven't undercut the intraday low down at about $74.30. Still looking like we're capable of doing that. The market remains below its 10, 20, and 50-day moving averages. Nothing to be excited about on the long side. We did get another rally up towards that 78.50, where we're expecting to be the first level of to be defended by the sellers. So these markets, is wild and volatile as they are staying within the ranges that you can look at just through simple support and resistance and the multiple time frame technical analysis here. And by the way, I rarely mention the book in these videos, but I did write a book about the subject, and you can find that at technicalanalysisbook.com. This trend line from the February highs continues to hold as well. And sorry about that. We've got we did get above the 5-day moving average. The 5-day moving average continues to decline, and we saw the same thing here, which was a heavier volume sell-off. late into the day as this prior level of support, which has been acting as resistance at 78.50, found sellers once again. So the market, you got to be, I think, even extra careful in here. The more times we get these powerful rallies that get people all excited, when they go from 76.5, and this isn't even a leverage fund, this is 76.5 to 78.5. When the markets rally that strong and then cave in at the end of the day, the frustration grows amongst more and more participants until they finally reach the point of capitulation. And I think that it seems as though we're getting much closer day by day to a real dramatic sell-off.